More investors are getting access to investments previously earmarked for the wealthiest members of society. But it may be risky for some to participate, experts said. Private investments, such as private equity funds, hedge funds, venture capital funds and stock in early-stage companies, typically require investors to be accredited. Generally, that means investors must have a certain income or household wealth to participate. Criteria include earned income of at least $200,000 a year for a single individual or at least $300,000 with a spouse, or a $1 million net worth, alone or with a spouse. Such rules are meant to protect against the unique risks of private investments relative to public stocks and mutual funds, according to the Securities and Exchange Commission. For example, private investments may have fewer disclosures for investors. Accredited investors are seen as more financially sophisticated and able to sustain the risk of loss, the SEC said. More from Personal Finance. How to use ETFs in your portfolio. More part-timers to get access to company retirement plans. You could owe 0% capital gains tax for cryptocurrency in 2023, but there's a problem. According to investor advocates, the financial thresholds to become an accredited investor aren't indexed to inflation. They haven't changed in decades. As a result, the protective bar of accredited status has been diluted as wealth and incomes have naturally increased over time. In 1983, accredited status was reserved for the richest households, roughly the top 1% to 2%, according to the SEC. However, 13%, about 16 million total households, qualified in 2019. That expansion let some middle and upper middle class households into the fold, but many may not have the risk capacity or financial savvy to invest in private markets, said Micah Hauptman, Director of Investor Protection at the Consumer Federation of America, a consumer advocacy group. If it had been indexed to inflation since 1983, the threshold to be an accredited investor would be $629,000 of earned income for individuals, or a combined $3.1 million net worth today. A $1 million net worth doesn't mean that much these days, said Charles Failla, a certified financial planner and founder of Sovereign Financial Group. You don't have to be that sophisticated an investor to be in your 70s and have $1 million. Private investments are, as their name suggests, different from their publicly offered counterparts. Anyone can generally buy the stock of public companies on a stock exchange, or buy pools of stocks or bonds via publicly available mutual funds and exchange-traded funds. By comparison, private investments let people invest in companies that aren't listed on a public exchange. Even investing in, or possibly lending to, a friend's or family member's private startup may require accreditation, said Cassandra Borchers, a partner at law firm Thompson Hine.